What's going on, everyone? Welcome back to my channel, Intelligent Investing, where we talk everything stock market investing and personal finance. So for today's video, I'd like to take a look at the United States Oil Fund, or simply USO, and whether I think it is currently a buy, a sell, or just something to keep on your watch list. So before I get into whether I think that USO is a buy or a sell, there are two important things you need to know about USO. Technically, it isn't a stock, it is an oil ETF, which means it doesn't work like a regular stock. And when investors buy or sell USO, the price does not go up or down. Rather, it tracks the price of WTI oil, and when those futures contracts goes up or down, USO goes up or down. And the second thing to note is that about a month ago, the fund went through a major restructuring where they changed their entire holdings. And let's take a look. So as of now, their weight in contracts is 15% in July 2020, 15% in August, 15% in September and October, 5% November 2020, 25% in December 2020, and 10% in June 2021. Now, the way USO makes money is by buying these futures contracts at a certain point and for a certain price, and by the time these contracts expire, they hope that the price they can sell them at is for a profit. And if oil has gone up, they can usually sell them for a profit. But if oil has gone down, they're probably selling them at a loss. Now let's take a look at USO and see if they're a buy or a sell. Looking at their stock price for the past 5 years, you can tell right now they're almost at an all-time low. That came at about $17 at the end of April when oil went negative. Currently, they're trading at $26.60, up about 5% on the trading day, and they're trading below the 50-day moving average as well as the 200-day moving average. Currently, their RSI, or Relative Strength Index, is 52, which is about in the middle, which means they're currently not oversold and not overbought. And based on this information, it is important to look at when the price of USO is going to break through the 50-day moving average. And when it does, it will definitely indicate a buy signal to investors. Also, when the RSI goes down below 40, it also indicates that the stock will be a buy. As we all know, the futures contracts for the month of May went negative last month. They were trading at about negative $40 at the end of April, and that was due to a very oversupplied market of oil and very, very low demand due to the pandemic going on in the world. But since then, oil prices have rebounded 259% in the last month. And does that mean that USO is a buy simply because it tracks the price of oil? Well, let's take a look. There's two main arguments to be had here. And on one hand, it's not a stretch to think that oil could have further to run. OPEC and its partners just started shutting in some of their oil output as part of a historic supply reduction agreement that lasts until 2022. So there's a large reduction in oil production, which is good for the price, and the supply will go down. And let's read on. Meanwhile, many US producers are also shutting in production to combat lower prices, and at the same time, demand has started rebounding as governments lift travel restrictions and allow non-essential businesses to reopen, which is really important. China's oil demand has already bounced back to where it was before COVID-19 outbreak. With supplies coming down and consumption beginning to rev up, crude oil prices could continue rising over the coming months. And based on this thesis, investors should be buying USO because as the oil prices go up, the price of USO will also continue to rise. However, on the other hand, there's a risk to this. Crude prices could take a long breather or worse yet, sell off in the near term. Several potential factors could cause a wave of selling in the oil market. For example, a second spike in COVID-19 cases could cause governments to reimpose travel restrictions. Meanwhile, oil companies might soon turn their pumps back on and resume their drilling activities, which would unleash a gusher of new oil that could weigh on prices. Add that to USO's underperformance issues, and speculators could quickly lose money on their oil bets if crude does not cooperate. So on one side, as economies reopen, as we can see in Asia, as the Chinese economy has reopened, the demand for oil has skyrocketed. As people are now going to work, they're driving, the flights are opening up, so there's a demand for this oversupply. And so the price of oil can start to go up slowly as the supply of oil goes down. However, like the article stated, it is possible that there will be a second spike in COVID-19 cases, which would definitely cause the same effect as the May futures contracts as we saw. It went negative, and so if there's a second wave, that means there'll be further lockdowns in the world, and if the Asian economies start to shut down again, there will be zero demand for oil, and there will be an oversupply again, meaning that the price of oil will drop dramatically, which means that USO will also in turn drop dramatically. So where do I stand on USO? Personally, I have not bought into USO yet, but I really do plan on in the near future. I'm very bullish on USO because just look at this. Since 2015, USO is down 83.58%. Oil is trading at the lowest it has been in a many years. If you take a look right here, it is currently trading at about $33.49, which has not been seen since mid 2002. So in my opinion, USO is a buy because simply it is not sustainable to have a price of $33 for oil. Most companies are not making a profit and they're having dramatic losses. For example, American companies need the price of oil to be around $40 to $50 to break even. So it's just not realistic for the price to stay around $33. And as the economies reopen, like the North American, South American, and European economies reopen, there'll be a drastic demand. And as flights begin to reopen and all that, a lot more people will be traveling and using oil and gas and whatnot. So long term, I can see the price of oil going back up to $60, $70. However, this is a long term investment in my opinion. In the short term, it is possible that the price of oil will drop more if there's a second wave of COVID cases, which means that it's possible that you can lose money in the short term. However, long term, there is no way I see the price of oil staying in the 30 range. It will easily go back to the 60, 70 range in about a year or two, which means potentially you could double your money very quickly. I will personally be purchasing a few shares of USO if it reaches around $21, $22 again, because it's very close to the rock bottom of $17. And if that happens next week, I will definitely buy about 50 to 100 shares because I think long term is an easy way to double your money. I'd like to thank you for watching this video. If you did enjoy it, please leave a like, subscribe, and comment down below your opinion on USO. And I'll see you in the next one.